Mr. Nathan, it's been something of a roller coaster ride, at least for investors in the Melbourne property sector, Melbourne apartment sector over the past decade. You're now predicting 30,000 new apartments over the next 3 years. What's this going to mean for the market?
Morris, it's probably more of a demonstration, if you like, of the maturity of the city. What we're seeing is actually the manifestation of long-term demand that's been building for Melbourne as a city at large. I mean, the city's changed in composition, changed in terms of population growth, and those drivers to medium density development that's been there. So what we're seeing at the moment is a cycle built out of a series of drivers that have been entrenched and building for 10 or 15 years. And that came together in the late 2000s and really provided the backbone, if you like, for an opportunity for investors to buy a share of the city. And that's what we've seen. People are coming into the city on the back of very strong drivers and Melbourne's enduring livability. And that's always been a backbone to the city as a whole. But it's important to remember for an apartment investor that property is a long-term play. So yes, we're going to have a cyclical event in terms of supply in the Melbourne apartment market across the whole metropolitan area, but particularly close to the central city. But investors need to look beyond the cyclical nature of an event like this, and they need to have regard to what they were investing for in the first place, and that is long-term. So you might be looking at a structural capacity in the city that's very beneficial and strong in the long term, but we've got a cyclical event coming. Investors need to hang tight, digest and maintain a focus on long-term justification.
So where do you see the areas of supply and demand?
What we're seeing peak supply in the central city in Melbourne, and in that context that's the central business district, a small grid around the CBD North and South Bank. There's perception that there's a lot of supply pending in Docklands, for example, but relative to previous cycles, that's not the case. But what we're seeing is supply more across the metropolitan region as a whole. And that's more representative of the city's maturity, because we're now seeing apartments come and start to proliferate into the market in areas that they haven't been before. And that's because the drivers in the housing market support that. So certainly what we're seeing, savvy developers and educated investors looking at fundamental opportunities. So not looking at opportunistic or speculative events, certainly not investing for the short term, but looking at markets, locations and even individual projects that sit very comfortably within the location that they are, within the local housing market and demographic backbones. Now they've always been the fundamentals to investing. And in peak market cycles, people can possibly lose sight of some of those. But what we're seeing is a real clawing back of people's expectations from some of their investment opportunities and really starting to analysing where the fundamental opportunities are. And those that are supported by long-term growth drivers. Certainly not a speculative play, not trying to ride a short-term cyclical opportunity for a quick buck, but taking a deep breath, looking around the market and acknowledging that even in a period of strong supply, there are still going to be opportunities and diamonds in the rough there for the taking.